Okay, this is oldschoolcharts.com, and we are looking at the Dow Jones Industrials. This is a long-range chart right now, and this is the chart as it ended up at the end of the day on Friday, October 15th, 2010. I just wanted to take this long-range look because I think it helps to step back from things a little bit, lose your emotional feel about it, and just be analytical. There's something I want you to see here, and that is this is the top of the last bull market back in October 2007. This is the April 2010 highs that everybody was saying that's probably the top. That's as good as it's going to get. Yet the trend line, if we draw a trend line from this top and what was supposed to be that top, we can see we have now surpassed that trend line. Additionally, if we adjust this line so that we're now over this top in the bear market, which really this is more this is actually a more accurate way of thinking in terms of where you would expect to find bear market resistance. You can also draw from here to here, which, by the way, puts you about here where the Dow broke out from an inverse head and shoulders. Anyway, make a long story short, the weakness that we had off of that April 2010 high in this context almost looks like a back test, doesn't it? Okay, we just have to look at things a little differently from time to time. If we go into a 2-day chart, we can see a little bit more detail on this inverse head and shoulders, left shoulder, head, right shoulder, and let me draw a line here. That comes very close to when that was taken out. It just it went ahead and had the steam to keep on going and take out that neckline as well. The S&P actually lines up exactly on that breakout day. But anyway, those of you who are familiar with head and shoulders and inverse head and shoulders patterns will know that the way to measure the implied target once you break out of that pattern is to take the depth of the head and add it onto the neckline. If we do that, we end up exactly at 12,000. Now, a reminder, that doesn't mean that's where the next top is. That just means that's where that pattern says it's going to take us. It could very easily be beyond that. So now I want to go into this area of the last 5 months, and I want to look at this in a little bit more detail. First off, we had the flash crash, which just really took things out of a pretty nice channel that the Dow had been in. If you allow for the bottom of that head and shoulders pattern to fall underneath the pattern, in other words, if you consider that as being out of bounds because of the panic bottom. But I think what we had for these 3 months, or two, about 3 months, I think we just had the typical bull market correction. You might be interested to know that every bull market since 1940 has had one of these occurrences where it seems like the wheels are coming off, and in many cases it kind of marks the halfway point. There's technical reasons why that could be, and those of you who do day trading will know that oftentimes a strong move will pause halfway before continuing for the rest of its duration. Anyway, if you draw a trend line from the top here in April and over these two tops and almost this one, not quite, it almost looks to me like you could make a case that this is a bull flag. That for about 3 months the market stopped going up, and they fell back into a consolidation pattern. However, even more interestingly than that, if you draw a line over this peak and this peak, make sure I get that line just right, you end up with what to my eyes looks like another inverted head and shoulders pattern. Left shoulder, head, right shoulder, breakout, a little pullback, and it appears now, let's go to a 1 hour chart. And it appears now that the Dow is just in a channel. At some point, it's going to break. When it does break, I would expect the neckline here to be strong support. They typically are. Additionally, you've got this green line, which should also act as support. So people who are talking about, this market is just the wheels are going to come off again, and we're going to plunge down below 9,000. They got two really technically significant areas of support it's going to have to get through. And just right now, as I look at this chart, as I look at it, I don't see that happening. I just don't see it. I'm not saying it can't, but it does not look to me like that's going to be the case. And then let's go into a 5-minute chart, and let's take a look at what's gone on for the past couple of 2 or 3 days. Again, drawing a trend line here to there, and underneath these bottoms, by golly, we've got a descending wedge, and we've got a breakout, we've got a pullback, and now we've got some noodling around, and the case could be made that even this pattern right here, the fact that it came down so hard and then stabilized and went sideways, considering this pattern as well, I think there's a pretty good case that could be made that this may be a bullish setup. By the way, this underlying trend channel should be more about there. When I zoom into the 5-minute, things get a little off in this chart. So what am I looking for? I'm looking for that line right there to break. I will be convinced of the bullish intent of this move thoroughly if we get over this line and we start to head up to 11.4. Remember, now I ask you to remember that number. What was it? 12,000? Let's do something. Let's look at this little head and shoulders. Let's measure its head. Let's add that on to where we broke out. 12,000. Coincidence? I don't know. You be the judge. I say we hit 12,000. This is oldschoolcharts.com. Visit the website. Check things out. It's really interesting what these trend lines can do. A lot more interesting than what computers do. Take care.